Hi everybody, Mike Toy here, Regional Sales Manager for National Brokerage. In this video I'm going to discuss long-term care versus life insurance and some of the different variations and hybrids in between. Okay, in this video I'm going to use a sliding scale to show the differences between long-term care with life insurance, or commonly known as a hybrid or asset-based policy, to a life insurance policy with an LTC rider, all the way to a life insurance policy with no LTC rider but with living benefit riders, which is similar but not the same. There's a lot of confusion about all these different types, and so I'm going to talk about some of the differences here. First kind, traditional LTC. Traditional LTC has no life insurance or death benefit component to it. It is just a long-term care policy that you pay into and draw from in the event that you need to use long-term care benefits. The next one on the scale is an LTC/life insurance hybrid. They are sometimes called an asset-based policy, but usually in the industry we call them hybrids now. And what they are is an LTC policy with a life insurance component to it. Usually they're paid into once, or over 5 years, or over 10 years. It's not the type of thing that you pay into over the long course of time like life insurance. Another point to consider is that they oftentimes have a return of premium feature built into the policy, where at any point the client can get some or most or all of their premiums back. That is what an LTC Life hybrid is. The next step on the scale is a life insurance policy with an LTC rider attached to them. And this is more heavily focused on life insurance death benefit, but they have the LTC rider as well. So if the client does need to use LTC benefits, they can. The downside is that the LTC benefits are not quite as comprehensive as they are with the traditional LTC plan. So they don't have as many options. The upside is that they can pay into the policy as long as they want to, which makes the premium smaller. And there is a larger death benefit component to it. So those are the pros and cons of a life insurance policy with LTC rider. The last one on the scale is a life insurance policy with living benefit riders, aka accelerated death benefit riders. Now this policy doesn't have any long-term care or LTC benefits attached to it at all. It is usually for people who either aren't concerned with LTC benefits, or for people who can't qualify for LTC benefits because of the extra underwriting involved. Now, the living benefit riders that are included in these policies are somewhat related to LTC, but they are not the same, as in you don't know what your benefits would be if you go on claim. It simply allows the client to accelerate some or most of the death benefit while they are still alive. So if they have a $100,000 policy and they need to go on claim, they become disabled, or have an event that triggers a need for that benefit, they can accelerate some of that $100,000 benefit while they're still alive, which is uniquely different than a regular life insurance policy. The downside is that there's no way to know what that benefit will be. There's a different actuarial calculation that's done, so you can't specify that they want to have 2% or 4% of the death benefit like you can with normal LTC. So this video was not meant to go in depth in any of these different options. It's simply to distinguish the difference between traditional long-term care with life insurance hybrid, life insurance with long-term care rider, and life insurance with a living benefit rider attached to it. So I hope that this video helped clarify the difference there. If you do want to know more about any of these options, please give us a call or contact us at the information below, and we'd be happy to go into details and talk about what carriers are best and in what areas. So hope this helped. Please click like and subscribe if so, and hope to hear from you soon. Thanks a lot.